Ladies and gentlemen, good evening and welcome to the Q4 and FY22 earnings conference call of Minda Industries Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sunil Vora, Group CFO for Minda Industries Limited. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and a warm welcome to all the participants. On this earnings call today, I am joined by my colleague Incur Modi. Apologies for rescheduling the call. We have uploaded our financial results and investor presentation for Q4 FY22 on the stock exchanges and our company website. We hope everybody had a chance to glance through the same. I would like to run you through the business landscape and followed by a performance in Q4 and FY22, following which we will open the lines for Q&A. Before speaking about the company's performance for this quarter and full financial year, I would like to throw some light on industry front. You may refer to slide 4. The beginning of year 2022 marked the third year of COVID-19 pandemic for India and the world, ushering in newer challenges for healthcare systems, as well as channeling economic growth. However, business continuity coupled with rapid vaccination coverage led to a strong resilience, pointing towards a GDP growth of 9.2% for FY22, the highest among the world's large economies. Moreover, the Union Budget 22-23 gives a focused direction towards infrastructure investments with 35.4% higher Capex over the current year's budget. Manufacturing and infrastructure are said to be the growth drivers bolstered by key government initiatives towards improving productivity. Signs of continued economic revival are evidenced in the healthy growth of indicators, including total GST collections, digital transactions, metal and coal production, electricity demand, rail and air passenger, freight traffic, and FASTag collections. Automobile registrations across most categories also recorded an upward trend. As things are settling down, PV and CV space is depicting clear signs of revival. With easing semiconductor supply issues, PV segment reported production of 10.5 lakh in Q4 FY22, which is higher than last quarter and even 2% higher than Q4 FY21. During the quarter, we also see risk getting shifted from fast COVID-19 to geopolitical issues, i.e. Russian-Ukraine war, rising crude prices and rising interest rate risks. While we do not have direct exposure to Russia or Ukraine, the consequent impact, which is the resurfaced supply crunch as semiconductor shortage, along with high metal and energy prices, does impact the operations. There was no respite from commodity price pressure as if they keep on finding new reasons to increase. Domestic PVs continues to see high demand and long waiting period with improving semiconductor supplies and backed by a strong shift towards personal mobility. Improved customer sentiments and excitement around lot of new launches, facelifts. Chip shortage expected to further ease in next few quarters as capacity additions by chip manufacturers come on stream, helping clear the sizable order backlog built over the past 6 to 12 months. Besides, inventory build-up from the current low of 15 to 20 days to the normative levels of 30-35 days will account for about a third of the incremental volume. Two-wheeler demand remained subdued during the quarter, both in rural as well as in urban markets, amidst higher fuel prices, a steep increase in the acquisition cost of the vehicle driven by higher commodity prices and insurance costs. However, we have witnessed increase in sales on month-on-month basis in March 22 and April 22, with opening up of the offices and educational institutions, festivals and marriage season. Private consumption is regaining traction backed by a recuperating contact intensive services and rising discretionary spending. Also, SkyMet has come out with its normal monsoon forecast. If the same is evenly distributed, it will have a positive rub-off on rural sentiment as farmers will be able to get a better crop realization, thus increasing their disposable income. It will thus benefit two-wheeler sales. This, along with marriage season in coming days, will also see a traction in auto retail. The demand momentum for electric two-wheelers remains strong, with a massive growth in FY22 driven by rising petrol prices, new launches, and government subsidies. Monthly run rate of e-two-wheeler picked up from 8,000 units in March 21 to 50,000 units in March 22. Strong growth is expected to continue as most OEMs have strong pipeline of new launches. The CV segment, after a long downturn which began post the announcement of axle load norms in 2018, is now witnessing strong demand recovery as all subcategories continue to inch north. CV demand growth, particularly for medium and heavy commercial vehicles, is backed by replacement demand because of improved utilization and profitability of fleet operators and government spending on infrastructure. Light CVs is being propelled by a surge in e-commerce and better last-mile connectivity, while demand for buses is being driven by the gradual reopening of schools and offices and easing of mobility restrictions. Outlook remains positive with double-digit growth expectation for FY23 in CV segment. Recent move by government to impose export tax on steel and iron ore and reduce tax on coking coal is expected to help ease some pricing pressure. Reduction in taxes on fuel prices by center is also a welcome move for the industry and will improve customer sentiments. While we are entering into a cyclically weak quarter, which is Q1, the medium-term outlook remains positive as we believe worst of commodity prices pressure and chip shortage are behind us. Domestic auto industry, specifically PV and CV, are poised for a strong growth in the coming quarters. Moving on to financial and operational performance for Q4 and FY22. You may refer to slide 5. We are pleased to inform you that the company had received approval from government for grant of PLI incentive. We have submitted required documents as well as bank guarantee for the same. Our various products like battery management system, onboard and offboard chargers, telematics, body control modules, vehicle control units, sensors, as well as select CNG components qualify for the incentive under the PLI scheme. We believe this scheme will be a game changer, bringing long-term investment and facilitating Atmanirbhar Bharat. We would also like to appraise about the investment announced in last quarter. The company has enhanced its stake in Minda from 70% to 77.35% by subscribing to rights issue as a face value of rupees 10 per share, investing 61.2 crore. The joint venture partner has renounced their right in our favor, enabling us to increase our stake. The company has also completed acquisition cum consolidation of 4 partnership firms by acquiring remaining stake of promoters. Consequent to this investment, minority interest in profits have reduced, increasing MIL shareholders' profits. The company also completed purchase of remaining 49% stake in Harita Ferrer from Ferrer GmbH. MIL now owns 100% shareholding of Harita Ferrer. We have continued our momentum for new order win in Q4 FY22 as well, with adding new customer almost across all product segments. This is on the back of building strong order book of 400 crores from EV new age two-wheeler OEMs in last quarter. Our focus on exports is yielding results with considerable export-led growth in switch and seating businesses. Uno Minda is an employee-centric organization, always puts our people at the heart of whatever we do. At Uno Minda, we believe that the success of organization and its people go hand in hand. Recognizing our people practices, Uno Minda featured in Wall of Fame of Great Place to Work Institute amongst the top 30 best workplaces in manufacturing companies in India. Coming to financial and operating performance, you can refer to slides 7 and 9. At consolidated level, revenue from operation for the quarter increased by 9% year-on-year to 2415 crores from 2238 crores in Q4 FY21. While revenues increased by 10.7% on quarter-on-quarter basis, in spite of supply side constraints adversely impacting auto industry volume. As you will note, while volume of auto industry declined by 17% year-on-year basis, the company reported 9% growth, largely on account of ramp-up of two-wheeler alloy wheel growth at all businesses, specifically to four-wheeler alloy wheel and aftermarket divisions. The revenues increase also comprises price increases passed on to OEM on account of increase in raw material prices. EBITDA for the quarter was at 276 crores, improving sequentially by 17% from 235 crores last quarter. The EBITDA margins for the current quarter were lower at 11.3% from 13.6% in comparison to corresponding quarter last year on account of sustained raw material price increase. The upward trend in commodity prices continued in Q4 as well, further fueled by Russia-Ukraine war. Energy prices in Europe also saw an alarming increase, impacting our acoustic business profitability. During the quarter, there is an additional employee cost of around 15 crores due to ESOP charge. Depreciation for the quarter increased by around 16 crores to 110 crores as against 94 in previous quarter on account of two reasons. First, high utilization level in the current quarter and also capitalization of some of the assets. Other non-operating income for the quarter increased to 21 crore from 12 crores, mainly on account of gain of around 9 crore from revaluation of investment in Minda Aluminium. Post stake increased by JV partner from 70 to 88. The PAT, which is MIL share for the quarter, was at 144 crores as against 140 crore in Q4 FY21 and rupees 101 crore in previous quarter. We would want to appraise that this is highest ever quarterly profit for the company. While we do look at ROCE on annual basis, which stands at 16%, just for information, since Q1 was significantly impacted due to COVID, ROCE for the rest of 3 quarters, which is Q2 to Q4, stands at 19%. On similar lines, the performance for the year ended 31st March 22 was also higher, with revenue standing at 8,313 crore in comparison to 6,374 crores for FY21. The EBITDA for the same period in FY22 is at 885 crore in comparison to 727 crore in FY21. Talking about margins, the EBITDA margins were lower at 10.7% in FY22 as against 11.4% in 9 months of FY21. We know both the years has had impact of COVID, but this year the impact of commodity price has been even bigger. So moving to next dividend, the board has also recommended a final dividend of 1 per share, which is 50% of the face value, reflecting commitment from the company to return value to shareholders on consistent basis. The company had also paid interim dividend of 0.5 per share in February 22, making total dividend of 1.5 per share for FY22, translating into dividend payout ratio of 12%. In order to reward long-term shareholders, the board has also recommended an issuance of bonus share in 1:1 ratio. Coming to the businesses segment-wise performance, you may refer to slide 15 to start with switching systems. The segment achieved revenues of 727 crore for Q4 FY22 and rupees 2483 crore for full year FY22, contributing about 30% of consolidated revenues. We continue to receive orders for new generation switches like sunroof, cruise control, power window switches, panel switches, vehicle stability switches, etc. Export is another big revenue stream which is growing fast, specifically in two-wheeler switch segment. After an American two-wheeler OEM, we have now received orders from renowned premium Italian two-wheeler OEM. Over the years, switches have also become a lot smarter with ability to communicate with other parts with inbuilt diagnostics, connectors and bootloaders. The continuing incremental orders for these next generation switches validates our ability to innovate and stay ahead of technology curve. Moving to lighting business, it has achieved revenue of 525 crore for Q4 FY22 and 1826 crore for full year FY22, contributing to 22% of our consolidated revenue. Lighting segment has become one of the most exciting segments with very promising growth outlook. After announcing large orders for LED lamps and orders from EV OEMs in last quarter, we have now received a large order for center position lamp from an Indian OEM. Moving to our casting business, it has achieved revenue of 425 crores for Q4 FY22 and 1339 for full year FY22, contributing to 17% and 16% respectively of our consolidated revenue. Casting business continues to grow with expanding capacities. The higher revenues during the quarter is on account of ramp-up of two-wheeler alloy wheel business and supplies to Korean PV customer with LPDC technology in four-wheeler segment. Our expansion in four-wheeler alloy wheel business at Bawal and Gujarat is on track with 30,000 out of 60,000 capacity per month enhancement at Bawal being commissioned recently. Moving to acoustics, slide 17, our acoustic business had achieved revenue of 192 crore for Q4 FY22 and 656 crore for full year FY22, contributing 8% of our consolidated revenue. Our European subsidiary Clarkson Hall has rebounded with around 30% growth with better profitability sequentially. However, it is still not out of the woods. Russia-Ukraine war may further dent the revival hopes. Locally, we have received order for speakers and tweeter from an Indian OEM. Moving to our seating business, which has achieved revenue of 227 crore in Q4 and 902 crore for full year FY22, contributed 9 and 11% respectively of our group revenues. Revival in CV segment and better volumes from two-wheeler had supported the growth in seating business. We continue to see good traction from EV space with additional orders from another two-wheeler OEM, EV OEM. During the quarter, we also received orders from a leading EV bus OEM as well. Export for seating business also remains robust with start of export for suspended seat in Europe aftermarket. Moving to other product business, which have achieved revenue of 341 crores for Q4 and 1130 for full year, contributing 14% of overall top line. Other businesses mainly comprise of sensors, blow molding business, Minda systems, GmbH, battery, Minda Capex, aftermarket, etc. The aftermarket division continued to show strong growth with Minda systems, GmbH also reporting higher sales led by product sale. Further developing on our relations with two-wheeler American marquee OEM, we have received orders for accelerator pedal position sensor. On EV front, we have received incremental orders for chargers from traditional EV OEM. The share of profit loss of associate joint ventures for Q4 is at 29 crores as against 21 crores in Q4 FY21. All our JVs associates, including infotainment JV with Denso, our safety system JV with TG, our CNG product JV with Minda Export and Roki have contributed positively. Moving to aftermarket and export, slide number 22. In terms of our revenue pie for the quarter ended 31st March 22, OEM business accounted for 90% and aftermarket at around 10% for Q4. Our aftermarket division revenues were at 225 crore as against 215 crore in corresponding quarter last year. We continue to strengthen our aftermarket presence with launch of new product as well as new branding and marketing initiatives. Our sales from international markets, which is export from India plus sales from overseas operations, stand at 16% of total consolidated revenues. International sales growth was led by Minda Systems GmbH having strong quarter with its innovative products in European market. Moving to our cash flows and debt levels, our net debt as of March 31, 2022 was at 569 crores and our net debt to equity stands at 0.15. Moving to slide 23 on strategic business update. The board has approved merger of Harita Ferrer Limited and demerger of domestic business of Minda Storage Batteries Private Limited with the company. Both these companies are 100% subsidiaries of the group of the company, hence no further share will be required to be issued on merger. This merger is in line with our stated objective of simplifying this group structure and achieve the economies of scale. The proposed amalgamation will lead to elimination of multiple administrative functions and record keeping and enhancing operational efficiencies, thus resulting in reduced compliance and administrative costs. Harita Ferrer Limited and sitting division of the company already have common premises at 3 of their plants and are sharing resources. Merger will help in better synergies and efficient operations. HFRL also supplies one of its products, such as PU foam, are required for manufacture of seats by sitting division of MIL. Hence, consolidation of HFRL by way of proposed amalgamation would lead to synergy benefit like smooth functioning and to manage operations effectively, efficient utilization of capital and help to achieve a streamlined structure by eliminating multiple entities. The proposed amalgamation is expected to lead to greater efficiency in fund management and deployment for the combined entity, and unfettered access to cash flows generated by the businesses which can be deployed more efficiently for funding growth opportunities to maximize members' value. Moving to Capex and expansion announcements, first at Vietnam, we had announced that our Vietnam subsidiary MIVCL has received a business from Italian two-wheeler OEM for blinkers and tail lamps. It is proposed to expand our MIVCL plant in Hanoi to serve this order. As of now, MIVCL manufacture only switches. With this expansion, they will have a big entry into lighting products, local manufacturing, which so far has been exported from Indonesia. The total Capex is around 37 crore and additional facilities expected to be commissioned by March 23. Next being Minda expansion. The company is also expanding its four-wheeler switch plant under Minda Private Limited at Chennai to serve new order received from Japanese and Korean OEMs. Total capital expenditure for expansion is around 73 crore and additional facilities expected to be commissioned by end of March 23. Toka Minda, the board has approved investment of up to 25 crores in TRMN for their new plant to be set up in North, with a total investment of almost 160-170 crores. Moving to technology, while we are expanding our operational capacities, we have also been enhancing our R&D capabilities. We are expanding our engineering team at all locations of our flagship R&D center, Create, which is in Pune, Gurugram, and Hosur. We recently also shifted our flagship R&D center Create in Pune to a much larger office with double the size. We intend to double the number of engineers at that location. At new office, besides EV components, we have also set up new labs for material science and ADAS. We recently also held our annual event called Innovation Meet at the new office. Around 50 shortlisted teams from all our group companies participated, showcasing innovation and led conversation around the future and emerging technologies. We also invited some of our customers and investors, analysts to the facility. We would like to take this opportunity to also thank all the investors and analysts who visited our facility and participated in Innovation Meet. We are also progressing from just component supplier to a system supplier with robust software capabilities. Majority of the component today has embedded software for ability to communicate with various systems and diagnostic purposes. CAN FD switch supplied to American two-wheeler OEM and our pioneer connected car platform Minda iConnect are classical examples of our embedded software capabilities. Recently developed intelligent transport system comprising of camera, switch, speaker, control unit, and driver console is another example of full system offerings from Uno Minda. We are also first in India to certify an intelligent transport system as per BIS 16833 Annexure D. As we all know, effective corporate governance is the foundation upon which our organization is built. In line with our commitment to set industry benchmark for corporate governance, we have further strengthened our board of directors by inducting one more independent director, Mr. Satish Borwankar. We have now 5 independent directors out of total 9. Having served Tata Motors for 45 years, he brings vast experience in product development, manufacturing, operation, quality assurance, etc. We also have Mr. Rajiv Batra joining the board as independent director during the last quarter, a seasoned finance professional with over 4 decades of experience in finance and accounting. With this, I would like to now open up the floor for questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Ashutosh Tiwari from Incur Securities. Please go ahead.
Yeah, hello sir. Congrats on good numbers. Firstly, we are seeing good improvement in profit from associate over last few quarters, and this quarter was highest ever. Can you highlight which are the JVs or associates which have done better and seen a lot of improvement in profitability versus earlier quarters, and also is it sustainable?
Yes, Ashutosh, you are right. I think this has been the continuous trend which we have been observing. So in past, we had some of the associates which were in red, so they have moved to black or reduced their losses. I think that is a straight positive. Plus also, as I have mentioned a little while back, there are 4 or 5 key subsidiaries, joint ventures, which is the Westport is doing pretty well to start with because the CNG business has been doing pretty well. Then our airbag business with TG has been doing pretty well. And also our JV with Denso and Roki. I think all these businesses we have been seeing significant traction, and we believe that the growth which we have seen should be sustainable in future.
So even like say Minda Onkyo is now break even. Minda Onkyo, which used to make losses earlier.
Minda Onkyo is break even, but I think I missed in my talk track. So just to tell you, the Onkyo, which is our JV partner, Onkyo Japan has filed for bankruptcy. So there, while we have got a turnaround in the business, there has been a uncertainty around the technical support. So what we have done, we have onboarded some experts from Onkyo onto our payroll to see that we get continuous support on the technology and we make business sustainable. However, as a conservative practice, we have taken provision for impairment in investment value in standalone. You won't see in consolidated because the share of losses has already reduced the investment value in the consolidated financials. But in standalone, you will see an exceptional item which is primarily for provision in the investment in Onkyo.
Okay. And this TG Minda also is doing pretty well. Is it a good contributor to profit now? Some color on that?
Yes. TG is very good. In fact, from previous quarter, it has done pretty well in this quarter. It is actually, if you see the last quarter of FY21, it was into negative, which has come into positive sustainably now for last 2 quarters.
Okay. And sir, minority interest as well has declined a lot. Is there, like say, the profitability has come down in say like Kosei or Vindarica and all, or any other reason behind that?
As I said, Ashutosh little while back, that we have increased our stake in Minda Kosei, which is the most profitable, I would say, subsidiary from 70% to 78% almost. And also, there were a couple of partnership firms where we are holding only half of it. They have also been consolidated from 1st of January. So, accordingly, you are actually reducing the minority interests in some of the companies, which in turn increase your effective ownership.
Okay. So actually it's more. Okay, so it got effective from January only. Okay, that's why.
Yes.
And the switch segment, we have highlighted new order wins or supplies for the sunroof, cruise control, paddle switches and all. So can you provide some color that how is the content increasing in the switches business, especially in both 4-wheeler and 2-wheeler versus earlier? Because these are new switches which probably were not supplying earlier, or their content is basically the switches are increasing in the cars now. So can you provide some color on that?
Yeah, so Ashutosh, you are right. The content has been consistently improving in almost all the segments. Primarily, there are 2-3 key reasons. One, if I exclude the commodity price impact, there have been a lot of electronics-led increase in almost all the electric switches, lamps, etc. And also this migration which we have been seeing from a normal product to a premium product, and also as a country we have seen transition from a segment car market to a B segment car, and also this high platform cars, or we call mini SUVs. There the kit value is normally higher than the obviously the lower one. So I think all this also has a positive impact. So overall, if we see the kit value for 2-wheelers, I think across the board we have seen improvement by almost like 10 to 20% in various categories, be it economy, executive or premium.
Okay, in cars basically.
In 2-wheelers you asked, right?
No, in both I'm saying, both 2-wheeler and 4-wheeler.
The 4-wheelers also there is an increase of similar range.
Okay. And can you just provide lastly 2-wheeler alloy wheel sales for the last quarter and full year, also 4-wheeler alloy wheel sales?
1 second, you're asking 2-wheeler alloy wheel sales for last quarter and full year?
Full year, yeah. And 4-wheeler as well.
Okay. No problem, Ashutosh. So last quarter, the 2-wheeler alloy wheel sale is roughly around 90 crore, and for full year is roughly around 280 crore.
Okay. And 4-wheeler?
Sorry?
4-wheeler alloy wheels?
4-wheeler alloy wheel. 4-wheeler alloy wheel, do you have readily available? Yeah, I got it. So 2-wheeler alloy wheel Minda, which is Minda Kosei, right?
Yeah, Minda Kosei. Yes.
It roughly around 250 crore revenue, and for full year around 800.
800 crore. Okay, sir. Thanks and all the best.
Thank you, Ashutosh.
Thank you. The next question is from the line of Nikhil Kate from Axis Capital Limited. Please go ahead.
Hi, Nikhil. We can't hear you.
My question was, you mentioned that there were certain price increase benefits that you've gotten. So can you just maybe quantify what was that benefit, and was there some part related to prior quarters, both in the main company and also in the JVs?
No, so if I could understand clearly, you are saying what was the price increase during the quarter, and was it relevant somewhere related to previous quarters?
Yeah, correct.
Yeah, so that's normal, Nikhil. I think this we see every year phenomena that normally the PI is always with some lag. So that's why we say normally Q1 is lower and Q3, Q4 are better, because by the time you start discussions to ending with your customers, it takes some time. So definitely in Q3 and Q4 there has been some positive PIs which relates to maybe Q1 and Q2.
Okay. And would it be possible to quantify what would be that number?
Sorry, your voice is not very clear, Nikhil.
Saying, would it be possible to quantify that number?
Not really, Nikhil, because it is for, now we have 32 businesses, and to now start capturing this is difficult. I can give you a very broad number, which I remember that number was roughly around, if I see at a very high level, what was the previous quarter numbers which we have got, or PI we have got in this quarter, is roughly around 14-15 crores. Okay. For which we have got in Q4 is broadly same as last year also. I think it was a similar number.
Got it. And just on the lighting side, just wanted to understand going forward for the next couple of years, what is the kind of order book that we have now? I think we've been talking about a lot of orders. So what is the order book that we have, and how do we see that ramp up over the next couple of years?
So lighting, I think, as I said, is the most optimistic business we have, and we are very, very positive on this business. Our order book is much more than what we shared. I think last quarter we shared something around 250-300 crores. As we speak, it is more than 350-400. I think we added more than 100 crores in last business. As I said, the one of the new business which you added, I said about that center lamp, that itself is around 60 crores.
Okay. So would it be fair to assume that most of this business will come into the top line maybe FY24, FY25? That would be a right number in terms of...
Something will come in 23. It will start coming in 2023, because we will be commissioning our Gujarat plant maybe in a couple of months max. So once it starts, we should start seeing, initially it will be more of testing and validation for our customers, because the new business which will start from this new plant. So the process which most of the OEMs follow. We might not have any significant sale immediately, but yes, you are right. We will have material sale coming in from next financial, which is 2024, and then 24-25 definitely.
Okay. And just lastly, I think a couple of more projects announced in terms of Capex. So what would be the Capex guidance for this year, maintenance as well as the project Capex that we are looking at, and the total investments in subsidiaries and associates?
So broadly, the investment we are looking at is same, Nikhil. So this year we would have done Capex of almost like 600 crores, which is broadly around 260 in sustaining and rest is growth. For next year, this is a similar number we are looking at.
Okay. And investments in subsidiaries or associates?
Nothing which is on the annual as of now, other than this 25 crore we just spoke.
Okay. Thank you. Thanks.
Thank you.
Thank you. The next question is from the line of Mumkush from MK Global. Please go ahead.
Yeah, thank you so much for the opportunity, sir. So just an update on the EV plant. So company plan to set up the EV plant. So what's the update on that, sir?
Yeah. So Mumuksh, we have first of all, if you know, we said last time that currently we have a controller business in Pune. So the initial volumes, which are obviously at a low level, will be supported from there. The new plant which we have to set up in North, we have got the land. The CLU has all been done. Board has also approved the Capex as in past. So our target is to commission it by end of this financial year.
And sir, what would be products that would be focused for this plant, sir?
So all these products, I think what we spoke, be it the BMS, be it the charger and all that. So all the specific two-wheeler EV components will be outside from this JV.
Sure, sure. And sir, can you sir, give an update on the TRM business, Toka Minda business? What's the growth happening there? What's the investment for?
So TRMN currently has a plant in Bangalore which does a revenue of roughly around 550 crores a year. And we have got a good business, a new business from a Japanese OEM in North. For that, we will need to put up a new plant. This new business, a new plant will have investment of roughly around 170 odd crores. And we are expecting incremental revenue of close to 400 crore kind of a number in next 3 years.
And so the products would be which products would drive that business?
Same product what we have, be it the seat belt. There is a product with a smart key. So today we manufacture the key sets in Bangalore. In this new plant, we will have the smart keys, which will be the future trend coming. So that also will be manufactured here in addition to some of the products which we do.
Oh, thank you so much.
Thank you, Moksh.
Thank you. The next question is from the line of Noel Vaz from Asian Market Securities. Please go ahead.
Noel.
Hello, can I be heard?
Yes, Noel.
Yes. Thank you very much. Thank you for the opportunity. Just one question is regarding, so the exposure to Europe, exactly how much of revenue are we earning from the European operation? So I just want to know what exactly is the revenue exposure to Europe.
Yeah. So I don't know, how do you see, Noel? I believe that you are looking at manufacturing from Europe, right? Or you are looking at export also from India to Europe?
If we could get both, that would be very nice.
So export from India to Europe is difficult number to be given immediately off the cuff. But sure. I can tell you what we are generating revenue from Europe. So we are doing roughly around 400 crores from what you call the Delvis and Ursol ISIS, which has been restructured. If you remember, around 6 months back, we had announced sort of restructuring our European operations. So roughly 400 crores is from that, and around 400 crores is from Clarton Horn. So in all, around 800 crore kind of a number from these operations in Spain and Germany.
Okay. Yes, that answers my question. Second question is actually relating to our exposure towards the various segments in India. So regarding two-wheelers versus four-wheelers versus three-wheelers, what is the current mix and has it changed over the past 1 year? And is this more due to the change in mix, more due to the fact that change in sales volumes for those particular segments, or has there been some wins in some segments that have grown the share over and above the previous year?
Okay. So from segment perspective, our two-wheeler revenues, if you see for the quarter, is roughly around 45%, and for full year is around 47%. And historically, if you see, that has been a trend. Some quarters it is plus minus 3-4%. So, but broadly the range is 45 to 55% for two-wheeler and four-wheeler. Three-wheeler we are not that big, and so is CV. So if you see from that perspective, I would say broadly on an annual basis, it is maybe between 45 and 55.
Two-wheelers and three-wheelers, right?
Two-wheeler and CV, four-wheelers.
Okay. So sorry, two-wheelers and? I didn't get that, sorry.
Four-wheelers. There is a slide in the presentation. I don't know the number. It's 20, right? Yeah, you can refer to slide number 20 on the presentation.
Okay. Thank you very much. That is all from me.
Thank you, Noel.
Thank you. The next question is from the line of Siddharth Bera from Nomura. Please go ahead.
Hello. Hi, sir. Thanks for the opportunity. Sir, on this EV side, possible to highlight what will be the order book currently, any new customers, if you have had any more inputs there?
So from EV side, Siddharth, I think we said last time that we have shortlisted some of the key customers because we don't want to get into multiple customers and not able to serve them properly. So we have not increased our customer base, but existing these shortlisted customers, we have been able to get newer products, which is basically, you can say, a deeper penetration of EV products and also the existing components.
Okay. So if I look at the kit value, what will be the kit value we are currently, I mean, we have orders which we are supplying in the current year? I mean, just to understand, will it be more of chargers and other smaller components, or you have added anything more there in terms of the components?
So we have not added any new component, Siddharth. So this year, if you are looking from 22-23 perspective, I think we will have sales from almost all the components except maybe a battery pack, which still is in the works. Otherwise, most of these components you will see production in 22-23.
Okay. Okay. And if you can share the revenue numbers for the sensor and controller also for the quarter, and what do you expect for the current year?
Yeah. So sensor, I think we spoke last time also. It has been sort of stabilizing at revenue level of roughly 50 crores a quarter, stable there. And controller, if I see, because we started looking at small EV also part of this, so that is around 15. So all put together, it's a quarterly run rate of 65 crores for both sensor and controller put together.
And I mean, how to look at the ramp up going ahead for the next 2 years?
So we are still sticking our guns to the target which we spoke last year for 5 years of 500 crores. I think we are on track. In fact, we are confident we will be able to do even before that.
Okay. And the last thing on the margins, we have sort of reached about 11.5% margins. There has been a lot of cost pressures in the last 1 year. Now, with price hikes being taken and sort of expecting the commodities don't go up significantly from current levels, what do you think you will look to target for your margins in the coming quarters?
Yeah, so quarter is always difficult to guess, Siddharth. We know that Q4 is normally better versus Q1, but if you see on an annual basis, we are pretty confident of maintaining the range we spoke last time, which is between 11 and 12 on a full year basis.
Okay. Any particular segment where there has been a significant cost pressure and because of which you expect that margins will be in that range, or will it be possible to sort of achieve the higher end of that band?
No, but actually, if you see, Siddharth, if we go back in history 2 years back, I think we have been clear that our margins actually should be around 12% only, because there was no Harita, which was a single-digit margin, and some of the new businesses which were not there at that time are still not into what you call break-even level, like alloy wheel and all that. So considering there are a lot of nascent businesses and also addition of businesses with low margin, I think we always looked at around 12%, but only with these commodity prices, the range might have shifted maybe 50 basis points, not much. So we are still holding our guns despite what we call increase in the commodity prices and all these cost pressures, etc. We are still working to see that we maintain this range of margin on a full year basis.
Okay, got it. Thanks a lot.
Thank you, Siddharth.
Thank you. The next question is from the line of Vimal Gohil from Union Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, if you could talk up just a couple of data points. If you can just highlight what is the revenue for Minda Rika for FY22 total revenue.
Sorry, you are asking annual revenue of MRPL?
Yeah, Minda Rika. Yes, that's right.
It's roughly around 830 odd crores.
830.
Yeah.
Okay. Okay. And last year, if I'm not wrong, it was around last year it was around 660, right?
630.
Yeah. Oh, sorry. 830. And sir, in the other revenue, if you can just highlight what was our revenue from controller, sensor, and telematics for FY22.
Controller, sensor. I think we just spoke about controller and sensor and telematics put together, last quarter revenue was at 65 crores. But if you are looking at a full year number, it is something around 260 crores.
This is the total FY22 revenue for all three products, right?
Yes.
Okay. And so lastly, I missed the Capex number. You said this year around the number will be around 600 crores, right?
Yes. 550 to 600 is what we are looking at overall, including all the growth Capex either announced or we are expecting maybe in a month or so.
Right. And so this 25 crore investment in Tokai Minda, sir, with a revenue of around 550 crores, what is the PAT margin this company generates approximately right now, or is it breaking even on PAT level, or how is it?
No, TRMN is a very old entity and it is into profit. I don't have their profit actual handy. Maybe we can get back to you if you don't mind, Vimal, on that.
Sure, no problem. Okay. Thank you, sir. Thank you so much and all the best. I'll take that offline.
Thank you.
Thank you. The next question is from the line of Mukesh Saraf from Spark Capital Advisors. Please go ahead.
Yes, sir. Good evening, and thank you for the opportunity. Most of my questions are answered, but just wanted to, understand this 1,000 crore enabling resolution, for debt. So could you kind of put some sense on, what are our further plans of, Capexes or investments, etc., for which we might require more funds?
No, so Mukesh, you see, every year we take some enabling approval from shareholders. So it is only enabling. As of now, there is nothing on the anvil. Quite possible we might not need any significant investment barring any timing gap, because if you see even last year our EBITDA is around 880 crores and we are expecting much higher in the coming year, and with a Capex of around 550-600 crore and tax of around 150-200 crore, I think we are more than internally funded for any internal Capex needs. So from that perspective, I think we are fairly placed. So as of now, this 1,000 crore, whatever approval you are seeing, is more of enabling, so that in case there is any requirement, we need not every time go back to shareholder and spend that 1.5 months time for getting approval.
Right. And so this also means that most of our restructuring plans, say, related entities, group entities, etc., is all now done, with this now, Samira and all of them getting now, part of the listed entities.
Oh, absolutely. Absolutely.
Okay. And just one last thing is, I think last time you had mentioned some steep targets for the Freevo, JV business. So could you kind of just reiterate some of that? I mean, now that you have more clarity, could you give some more sense on how that entity could evolve?
No, the target remains same, Mukesh, which you spoke about 100 crore of revenue in 6 years, and the investment also which we have spread out of 380 crores. Everything is as it is, and there is no change in that.
Okay. Great. Thank you for this, sir. I'll get it.
If at all, we are seeing only upsides, no downsides.
So the reason for the question was also that if you think 1,000 is very easily achievable.
Yeah.
Okay. Right. Thank you so much.
Thank you.
Thank you. The next question is from the line of Anupama Botra from Aryan Capital. Please go ahead.
Yeah. Thank you, sir. I wanted to know, can you elaborate more on this PLI scheme? Like, how much investment would be needed and what all products would be covered under the scheme?
So, Anupama, the PLI scheme investment required is I don't know if you have seen the policy, it's around 250 crore of Capex over 5 years. Our Capex is much more than those threshold. So we are not going to do any specific investment only for the PLI. We are doing investment purely on merits, and obviously the scheme does give you that edge in terms of competitiveness for any domestic sales and also exports. So that's on the Capex. And in terms of I think products, I have also spoke initially about what all products which are eligible, be it sensors, be it telematics, be it all the EV products we are doing, some of the CNG components. So there are multiple products which are eligible for the PLI benefit.
Okay. And so one more question. Has there been any increase in EV kit value, like in last quarter, quarter 4, on quarter basis or year-on-year basis? If you can give us some information.
No increase in last quarter.
Okay. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Peter from Casima Wealth Management. Please go ahead.
Hello, sir. Good evening. Sir, my first question is that you had mentioned that the alloy wheel sales was 250 crores in this quarter and 800 crores for full year. Was that for four-wheelers or four-wheelers and two-wheelers together?
No, 800 was, I think, question was asked on four-wheelers, so that was for four-wheelers.
Four-wheeler, okay. So two-wheelers is 90 and 280 crores for the full year.
Yeah.
Oh, thank you. Another question. So what are the major raw material costs that you incur? What are the major raw materials, and what is the raw material basket cost you are incurring right now?
I didn't get the question.
So what are the major raw materials that you are using?
Major raw materials.
Oh.
So major raw material obviously is all commodities, be it aluminum, be it steel, be it all the plastics, resins. So I'm not sure what you are actually looking at or looking for.
No, sometimes some companies they give a raw material basket cost. This quarter it was this much, it has increased this much. So who understands?
No, we are very, very diversified. Unfortunately, Peter, we have 32 lines of businesses. It will be a Herculean task to even think of calculating an average basket of commodity prices, because it's not only calculating about average, it's also about your consumption is different, your growth is different business to business. And at the end of the day, I'm not sure what will we achieve by putting those kind of efforts.
Okay. And sir, are there any cost reduction initiatives, major cost reduction initiative underway, just in light of seeing how much margins to protect?
No, Peter. We used to have a specific cost reduction initiatives a couple of years back when we had the onset of COVID. So what we are trying to do is we are trying to sustain some of those cost reduction initiatives in spite of market sort of coming back. And I think that is what has helped us sort of cover up some of the pressure on the margin. And we are trying to see that whatever good work we have done in past, that should not go away. And we are trying to sort of maintain those benefits of those initiatives which you have taken in past.
Okay. So that line item purchase of stock in trade, as a percentage of sales, it has increased comparatively to the last quarters of last year and the year before. So any light color you can throw on that? Hello?
What number are you looking at percentage?
Sir, it has gone to 16% this quarter compared to it used to be in single digits in some of the quarters in the year and the year before. Sir.
Cost of material?
No, purchase of stock in trade, just that line item, purchase of stock in trade.
No, I think we have to see in totality, Peter, we have to see cost of material consumed and stock in trade. We can't see in isolation.
Oh, I thought maybe that specifically some new materials that you are importing or something, product component, uske wajah se cost बढ़ गया क्या करते?
No. So what normally we do is we look at it in totality. So if you see from that perspective, our last quarter, the total RMC cost is roughly around 64%. And in last year, Q4 was also 64%. So broadly, we are in same. And if you see on an annual basis, last year it was 63% and now it is 64%. So broadly in that range. So there is no material difference if you see from that perspective.
Correct. No, okay. And sir, finally, can you tell me that what was the price hike you had taken in last quarter, last fiscal year in the FY21, sir, in general?
So that question is more relevant for OEMs, Peter, not for us.
Okay. And so the CVs, there's a lot of CV demand. So any exposure you plan to have in the future on CV market?
No, we are not, unfortunately, have any specific plans for expansion in CV. So what we have been working is that, Peter, if you remember, when we have acquired Harita Seating Systems, so which is having significant share of business with CV, because from Minda perspective, earlier we were not having. So what it has done is that we have got entry into lot of CVs which we were not serving, and now backed on the business we had for seating, we are sort of approaching them for all other products, be it switches, be it lamps, acoustic, etc. And that's how we are trying to increase our business with the CV players.
Okay. That's all from my side. Thank you for your time, sir.
Thank you, Peter.
Thank you. The next question is from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah. Hi, sir. Good evening. Thanks for taking my question. Sir, my first question is on the seating business. We have delivered close to 900 odd crores. Sorry, am I audible?
Yeah, I could not get which business is seating business.
Yes, sir. Is this better, sir? On the seating business, we have delivered close to 900 odd crores of revenue this year. How do we see the ramp up here by FY25 in 3 years time frame, and approximately what should be the margin that we can take here? I understand this year we would have had cost pressures, but if you can give some sense on that per se.
Yeah. So, Shyam, if you remember, from 1st of January, we got effective control of Harita Seating System Limited. And even though the revenue for preceding year was, I think, 650 odd, we said no when we announced the acquisition, the revenue was 750 crore, and our target was clear to double that revenue in 5 years time frame. And I am pretty confident that we will be able to achieve even before that. So if you see this year itself, we have done 900 crore. So 1 year gone by, I don't think we will take another 4 years to reach 1500. I'm sure we will be able to do in maybe 2 to 3 years now. So from that perspective, I think we are very, very optimistic on the seating business, and I would say we will be able to deliver better than what we have promised.
And on the margin, sir, for seating?
The margin also, if you see that despite all the cost pressures, in fact, seating from CV perspective has got very big impact of commodity prices, because steel is the main RM there, which prices we have seen almost more than doubling for steel, and where you don't get a pass through. So if you see from that perspective, what happens, and I think this example I have taken in past also, that whatever commodity price increase, even if you are able to take from customers, it is margin dilutive. So if you do nothing and you just get your margin, absolute margin protected, it will mean that in terms of percentage it will reduce. But despite that, we are pretty confident that we should be able to get into a double-digit zone, which it was a single-digit even before our acquisition.
Okay. So double-digit when we reach the 1,500 kind of revenue,
yes.
Sir?
Yes.
Okay, understood. Sir, here steel is not a pass-through for seats is what you mentioned. I am just trying to get it clear. Steel is not a pass-through in seating, sir. Is that what you are mentioning?
No, steel is passed through for some customers. What happens, say for example, on 100, if the steel
I got that math, sir, numerator, denominator math, that I understand. I was just wondering.
That's it.
Okay, understood. Sir, and one other point, on the PLI, you said our Capex will definitely be higher. I understand that. But a little bit more clarity here. While we are investing in multiple product segments that qualify under PLI, what could be the eligible Capex under PLI from Minda Industries per se? If you can give some perspective, that will be helpful, sir.
I won't give a number at this moment, Shyam, specifically. It will be more than 250 crore which is required, but based on whatever interactions we have been having with the government, we believe that the second list, if you remember, as government promised while announcing the first list, should be on the annual. Once we have that list, I am sure might have maybe 1 or 2 or 3, I don't know what all additional products which might get what we call eligible. If not, then obviously there is no change. If it does, then maybe that's the right time we tell you what will be the actual investment for components or products which will be eligible under PLI. But as of now, I can tell you it is more than 250 crore.
Understood. Sir, and so the incentives that we get under PLI, will that be actually a pass-through to the customers per se, or will we try to retain some part of that?
So it's a very tricky question, Shyam. Look, if I am investing, then ideally I should have this entire margin with me. But what happens is that you are in a competitive world, and if your competitor also has got the benefit, somehow it will reflect in the price itself. So it's quite possible that even though you might get the PLI incentive, say for example 8%, it's quite possible that competition eats up into that margin. What it does is it gives you a big advantage when you have an export, because there with other competitors you don't have that challenge. But domestically, it will give you an edge over somebody else who is not qualified under PLI. Otherwise, even your competitor has got this incentive, then you are actually on the same footing. So somewhere, what it will do is, it's quite possible it might not end up fully to flow to the bottom, but it will end up increasing the share of the business in the country. And also, secondly, because OEMs also multiple have qualified under PLI, there is a general expectation that India gradually will also have increase in exports. So which means that if there is an export or there is a vehicle being manufactured in India for export, the components which are being sourced through the current sources will continue. So overall, it will be increasing the size of the industry itself.
Understood, sir. Sir, one last question, sir. In the alloy wheels, while we are doing extremely well from a revenue and a ramp-up perspective, now aluminum prices, just like you mentioned, even in the case of steel, has gone up very substantially upwards. So approximately what would be the margin range for two-wheelers and four-wheelers? Because when we started, I think we were in two-wheelers, we were thinking of a 15% kind of a margin band, and four-wheelers we were upwards of 20%. What would be for FY22? Any broad range, if you can just provide, that would be helpful.
So Shyam, I remember this specific discussion that two-wheeler we said we will give you absolute margin profile once we see plant stabilized. Only thing which we said was that it will be higher than our group average margin, and that we are still holding to that view that it will be higher than the group average margin. But let the plant fully stabilize and have a full year of stable operations. And in terms of four-wheeler also, if you remember, we have been consistently saying that 20% margin has not sustainable. In fact, that was when the prices were low. So even if, for example, you are able to retain that absolute margin, just because aluminum has doubled, this will come significantly down. So I hope you understand that math as you just mentioned.
Sure, sir. But will it be at least a 10% band for in four-wheelers and something close to that in two-wheelers?
No. As I said, it will be higher than the group average.
Oh, okay. Even in FY22.
Yes.
Okay. Got it, sir. Thank you very much. I'll fall back in the queue. Thank you.
Yeah, for four-wheeler, not for two. Because two, as I said, it's still under stabilization, as not yet in green, not in black.
Thank you. The next question is from the line of Nikhil Kale from Axis Capital Limited. Please go ahead.
Yeah, thanks for taking my question again. Just wanted to drill down into the Capex part a bit more. So I think the Capex that you have talked about for switches and the...
Hello, Nikhil, we are unable to hear you. Can you hear us? Nikhil, can you hear us? Due to no response, we move on to the next participant. The next question is from the line of Vikas from Health Tech Services. Please go ahead.
Yeah, thank you. Okay, one thing is there in balance sheet, in the current liability side.
Sorry, your voice is not clear, Vikas.
Hello?
Vikas, your line is not clear.
Hello,
Vikas,
can you hear me?
To speak a little louder.
Hello, can you hear me?
Yes, please.
Yeah, in the balance sheet side is the current liabilities. The total outstanding dues in the micro and small enterprises, it still is a 180 crores is there. Any major default is happened, or it's a timeline, whatever the guidelines of the MSME? We respect whatever the guidelines is, there is a 45 days.
There is no delay in MSME payments, but just to clarify, Vikas, it is not MSME 45 days, it is only MS, not MSME.
Yeah.
And also purely manufacturing, not anything else.
Okay, so there is no issue.
Anybody who is micro and small and manufacturing, there you have to make sure that you pay within 45 days. If not, then you have to pay interest. That is very well understood, and we are very, very clear. We pay, in fact, a few days before, not with any delay.
Yeah, is a good. And one another part is there in the asset side. Sorry.
Sorry.
And one another part is there in the asset side is the goodwill is increased by 281 crore to 284 crores is there. There is a slightly increase is 3 crores is there.
Okay.
So any specific reason or what is the mechanism to write off this goodwill item?
Goodwill is not written off.
Amortizations.
It is tested for impairment. So the impairment testing has been done, and I think auditors have also been convinced about the carrying value of the goodwill.
Okay.
And intangibles, which is the in-house created technology, that is being amortized over the life of the technology which has been generated.
Okay. So every year is a statutory auditor is tested whatever the life of the intangibles and the goodwill.
Yeah. So intangible, as I said, intangible is normally amortized, and goodwill is tested for impairment.
Okay. Test for impairment. And what is the life they consider right now?
So it's different for different products, because what happens, Vikas, is that when you say intangible, it is not only one product. You will have multiple technology investments, multiple patents, products. So if the life of the product is 5 years, you will amortize over 5 years. Life of the product is 8 years, you will amortize over 8 years. If it is 10 years, you will amortize over 10 years. There is not a single number.
Okay. So in any ballpark number is there is a 5 years or 6 years kind of thing is there, average out?
I'm not able to follow you.
Not possible, no? Because it depends on the product to product.
I'm not able to follow you.
Hello?
I'm not able to follow your question.
Hello?
Yes?
Hello? So it is not possible to average out is the amortization and the testing period is there. It depends on the product and the life of the patent is there, correct?
Yes, you are right.
Okay, thank you.
Thank you very much. And now hand the conference over to the management for closing comments.
Thank you. Thank you everyone for joining on the call. I hope we have been able to respond to all your queries adequately. For any further information, we request you to please do get in touch with us. Stay safe, stay healthy. Thank you.
Thank you very much. On behalf of Minda Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.